Hello, how are you doing? Welcome along. It's really nice to see you. Welcome to our weekly catch-up here at FTUK. How's your week gone? Hope you've had a good week in the markets. That CPI data, pretty interesting. Good bit of volatility. I've had a good week this week in the market, so I'm going into the weekend pretty pleased. I hope you've managed to get some green pips along the way, depending on whether you're trading an instant funding account or an evaluation. We have much to actually get through today. It's going to be a busy session, and it's been an incredibly busy week at FTUK for reasons which will become apparent in just a second. So take a look at what we've got to talk about today. We're going to be doing a preview of our, well, I say preview, it's more of kind of like just let's have a quick look at what's been created of our new website. We've had a new website that's been in development for a couple of months. It's nearly finished, so I thought, gosh, that'd be a great thing to actually share that with everybody, so you get a bit of a sort of sneak preview. It's definitely had a lot of work put into it. We're designing, hopefully, an easier, more modern approach for people to get a smooth access to where they want to go on the website, and also the information that's going to be on the website is going to really bring a lot of transparency and clarity to what we're doing here at FTUK. So it's a good thing. We're also going to be revamping our accounts as well. So we're aiming for a big launch in August where we're going to have a new website and new accounts, and everything is all going to be sparkling and new to set us on a good footing for the rest of the year and into 2025. So, you know, we are committed to the prop industry. I've said it so many times. So we've revamped our entire account range as well, and we're going to bring a new two-step evaluation program, which I think you're going to like. It's super competitive and a great stepping stone for anyone who's never traded prop accounts before. So we're going to go through a little preview of that so you can get a flavor of some of the rules. This is not all ironed out yet completely, you know, but we're trying to communicate and be transparent with everyone. So we're going to talk about that today. We're then also going to look at a 1-star review that we've had recently on Trustpilot, and I think it's worth talking about, but respectfully, of course, obviously, because people have get to a point where they feel that they need to put that information on Trustpilot. So I want to just go through a few bits of context around that, and that's also going to tie into a sort of a mini workshop that we're going to do, because it pertains specifically to the review, and that is understanding order types, which I think is a good thing for us to do as a company. And then we'll have a weekend offer, which is obviously going to set everybody on a good footing for the coming restful day, Saturday and Sunday. Gosh, I am sorry, it's been a long week. Also, so just to fill in some detail for you, I have been feeling really rough as well all week, so I've got my mic on standby for the mute button, so I will more than likely need to cough a lot throughout the stream. So I do apologize for that, but I'll try and keep it to a minimum. This is our Discord. If you've never seen it before, please do scan the UR code and head over there and join in. It's been really busy this week. There's so much going on at FTUK. So yeah, please do join the Discord. It's the first place to find out anything new that's been going on. So please do head over and get involved in that. Okay. Right, let us begin, and let's talk first up about something which I didn't put on the menu, but I think is very, very important for us to talk about, and that is a situation that's occurred over the last couple of weeks with swap rates. And we had a few complaints in by traders saying that these swap rates were really at a disadvantage and it was causing them a lot of problems and stuff. So it's something that I have seen prop firms do before. So we've elected to move to a position where part and parcel of our new revamp as well, with our newer accounts and stuff, we're going to be removing swap rates from our trading platforms. It's been done. We've started the journey, but we need to finish it off over the weekend. So there's going to be no positive swaps or no negative swaps on our accounts, which will even everything out. Now, from a prop trading point of view, that's actually quite a good thing, because the negative swap rates, obviously, scalping is allowed at FTUK, but we also have a problem with people that are just really going for it at FTUK on the scalping front. But equally, the negative swaps can cause you a lot of problems if you're trying to be a little bit more prudent and you're trying to hold your positions for a bit longer as well. So we have had a few messages in about that, so we've decided to take that decision. So we're going to take all the negative and positive swaps off it, so which I think from a prop trading point of view is probably a good way of doing it, to be honest with you, simply because it allows people to focus specifically on the market. It's the talent in actually reading the chart that ends up being a component of their profitability, rather than the fact they were just buying and holding, or that buying and holding gets masked because the negative swap rate was going against them. So it's something that we're going to experiment with. The only caveat being, and I got to say this, is that it could actually change in the future. So this is not set in stone, but in the spirit of being very open about the reasons why and what we're experimenting with, we've decided to go on along this route, at least for the foreseeable. So please do pay attention to your trading accounts, and you'll see that those swap rates, they will basically just go to nothing basically over the course of the next few days. Right, let's talk about the website. This is super exciting. This has been a labor of love for a big team of people at the company, and it's starting to come together. We took the decision to maybe revamp our website. We've had a website that has done us proud over the last few years. It's been particularly useful and successful, but it's time for a refresh. It's time for a change, which brings us in line with a lot of the new modern prop companies. So what you can see on the left is our old homepage, or the current homepage, with the text and the way that looks at the moment. We are going to be changing that to a much more modern looking website with a lot more video content on there. It provides a lot more transparency. We want to put trust, integrity, and transparency right at the heart of what we're doing. So we're going to be knitting in video content, explaining stuff, and have a lot of interactive tools along the way, so people can find a very easy route into what it is they're looking for, depending on how you want to be a prop trader, the levels that you want to be at, the types of trading that you're interested in. Hopefully this is going to be a much smoother journey into all of that. Now, that's our program page at the moment that you can see on the left hand side, which is basically quite an old-fashioned way of opening up the different parameters of the accounts and selecting the accounts. We've gone on the right hand side here, you can see we've gone for a very simple, clean look, where you just basically select the amount that you want and then the account you want, and you get all the statistics there. So it's easy for you to get all the information with the price points, so that you know exactly how much all of this is going to cost. And then finally, you can click on this one here. This is the contact page. You can see our contact page. It's done its job, but it does look a little bit old-fashioned now in comparison to how the new one looks. So we're really pleased with the initial designs. This is the third iteration of the plans overall. It's really come together. These are the plans that are going to go into development now, and then we will be rolling it out from the beginning of August, hopefully around the beginning of August onwards. So you will see things change quite a lot. And then obviously that's going to dovetail very nicely with our new accounts. Let me just have a quick drink of water. Excuse me, bad chest. Okay, so we have had a complete rethink of the way that we do our accounts, and there's nothing wrong with the old ones. They've definitely done their purpose, but we are going to change things around a bit, and we've come up with a new way of it's a new structure for pretty much all of our accounts. We've been known historically as being one of the leaders for instant funding. That's not changing. We are still going to do it, but we're sort of doing some tweaks and twiddles around the edges and putting some new stuff around there, which I think is going to make us super competitive and also bring a lot more extra stuff for the customer's benefit. We're also revamped our one step, which is obviously a very popular way of trading for most people, but that's been it. That's all we've really offered for the last couple of years. What we've really done is we've really catered for all sections of the market now, and we've brought a new two-step in there as well. So you'll have a choice depending on how you want to work, depending on how much money you want to spend, depending on your level of experience, or whether you're completely new or you're up for a bit of a challenge, or you want to keep the price nice and low. We'll have something for everyone, and that's the inclusion of this new two-step. That's where we're going to put a lot of attention. We're going to put a lot of focus around this two-step evaluation. And I think it's going to be good. So what we're going to do each week now, between now and sort of those early weeks in August, is we're going to talk in a little bit more detail about these accounts. So we'll start this week with our new one, because we're very proud of it, and that is our new two-step evaluation. You see all of the rules on here. We've brought some old school techniques back into prop evaluations, and we've also changed a few things as well. One of the big things, obviously, it depends how your prop firms talk about these things. There could be some changes, but what we are thinking is we're going to stick with the terminology: a challenge account and then a variation account. And the reason why Excuse me. The reason why is because I think that it needs to be clear that when you're doing a two-step, what the reasoning for the two-step is. The reasoning for the two-step is because on a one-step, someone might just be lucky. And you don't necessarily know whether they've passed on their own merit or whether they've just happened to be at the right place at the right time with the right trade and the right leverage. But it's not the best barometer. There's nothing wrong with it, but there's nothing. You could maybe go a one step further than that and just clarify, get some verification on whether that trader is actually skilled enough to keep replicating the same thing. Because obviously we're looking for consistent traders. And the way that is done is by doing a two-step program. So the first bit is called a challenge. We're going to stay with the challenge, and then the second bit we're going to stay with the terminology that describes that second step as a verification level. I mean, it's for that reason, because we're just verifying that everything is okay. We're going to have a minimum trading day on this as well, and that's going to be a 3-day minimum trading day across the various bits of the evaluation. Obviously there's not going to be no time limits. I don't think we've ever had a time limit on how long you've got to actually pass these challenges, so it's quite a relaxed approach to it. We've got an 8% static drawdown on the challenge bit on the first step, and the second step, that's going to change as well. That's going to be a static drawdown of 5%. However, you are only going to have a 5% profit target, and the reason is we don't want people to stay in the verification phase for too long. The idea is just to say, yeah, okay, everything's good. It's a checkbox, yeah, just to make sure. So we don't need to have a very ambitious profit target on that second on that verification level. So that's why there's a change. The profit target on step 1 is 10%, and then into 5% for the verification. And then once you're funded, everything is just sort of like normal from there. Profit split is going to be 80%. So it's the same levels that we've got on all of our accounts at the moment. So there's nothing wrong with any of that. And you're going to get a generous 30 to 1 leverage starting point on the evaluations. And what we are going to do with all of the accounts is we're going to start ramping leverage, so it gets more, you get more leverage the better you do. Basically, that's a way of managing the risk for the company, so it allows people to get involved and then to start to do well. Okay, we trust you, we can access more funds that way through greater leverage. So the maximum leverage on these two steps will be 100 to 1, and they will start at 30 to 1. One of the big changes that we're going to be doing at FTUK is we're not going to allow, as a rule, news trading. That's something that we've thought about for a while, and this also feeds into the 1-star Trustpilot review that we're going to talk about today, because news trading can be very good for traders, but it can also cause a lot of problems as well. So what we've decided is to not limit it, but we are going to sort of news trading is going to become an add-on. So if you elect that you want to work like that, then you'll have to actually actively go after it. I think by default we've had it there as that you could just trade anything as we wanted. We're going to experiment with working with a no news trading environment. So that's not going to be allowed, but you will be able to purchase that as an add-on in the evaluation stages if you need to use news trading as a way for passing your evaluations. So it's not like we're limiting people. It's a different way of framing it, just to see if it manages risk in a little bit more of a measured way and stops people blowing accounts up, basically. Whole trading, obviously, overnight and over the weekend, that is no problem with that. You are going to be able to do that. The stop loss is the big change as well, is that stop losses are not going to be mandatory. And one of the reasons for the two-step is that we've got the account protector. That's one of the default tools that we have at FTUK. So it's not that the account protector is your stop loss. It's not. But, for some people working with the account protector and then having to action a stop loss, that can be problematic sometimes. So we've elected for the two-step. You're not going to need a stop loss by default, which is a big shift as well. Now it's going to start at a price point of $99 for our base level account. And if you look at this here, which is super competitive, the levels of the two-step are going to be 10k, 25, 50 and 100k. So it's quite a big change in terms of size, and it's just simpler, basically. That's the reason. You're going to start with the 10k in the challenge phase, and then obviously the verification, you're going to stay at 10k, and then if everything's good and you get funded from there, then you will stay at that 10K and then move up from there. Very similar to how we've always done it at FTUK. Your scaling then doubles as a result of that. So on the 10K account for $99, you could potentially get to around about $320,000 on the level 6. Level 7 is going to remain as a locked off unless you want to purchase that, and you can unlock it as an add-on, which is something we already do as well. So we're just going to keep that in place. You can see that the profit split as well starts to ramp up as well. So you're going to start at a 50% profit share, and that's going to go up to 80% by the time you get up to those bigger levels as well. So we're increasing the leverage. The leverage is now dynamic, and also the profit share as well. And I think that just balances it out quite nicely, and it allows us then also to bring it in at a super cheap price. So all of this is going to start from $99, which is superb. Those are going to be, that's the actual breakdown of the profit share and the leverage that you can see there in front of you. So yeah, it's fantastic. Those are the add-ons that you're going to get, so you'll be able to activate that level 7 if you decide you want to do it. Also as well, we're going to be doing across the board on everything. We're going to be moving to bi-weekly payouts unless you specifically need to withdraw your money every week. And if you do that, that's fine. You'll be able to purchase that as well. But we're going to move to a 14-day payout period. And that's going to be calendar days. It's not going to be trading days. So that allows us to try and keep people from hitting the target and churning the account and then leaving and blowing up. That's usually what happens with that. So by just holding people in a little bit longer, it allows them that little bit extra room, and then you start to see in the numbers that they start to reduce the amount of people that are blowing up, because ultimately we look for consistency, consistent traders. So it's not in our advantage for those just to blow up instantly and just disappear. You know, we need to sort of try and nurture people along the way, and that's the reason for doing that. Gosh, there's a lot in there. That's our fantastic new two-step account. If you are interested in doing this, we've not got a specific release date as yet, but what we are going to do is from August onwards, this is all going to be active. If you are interested in getting involved in this like now, and you want to line up for some good deals, and I think there's going to be an add-on thrown in there for free as well. You can pre-order all of this from Monday onwards. Now, it's only going to be through the chat box on the website, so you'd need to speak to customer support through the chat box, but you will be able to pre-order these from Monday before the actual launch. They're going through the testing phase at the moment, just to make sure that everything is okay and everything's lined up. So if you are interested in doing this, then you will be able to pre-order from Monday. You just need to head over to the website, get on the chat and say you're interested in talking about the new accounts, and we've got a web page thing that they'll send to you, and so it's not public yet, but if in case anybody does want to do that, then that's something that you can do, and you'll be able to, I think there's some add-ons thrown in there as well for free for people that just want to do that. So it's just another way of creating a good deal for all of the customers. Right, that's the two-step. I apologize. We're talking so much and it dries your throat out. Let's talk now about a 1-star review that came in on Trustpilot. We have put an awful lot of effort into engaging in Trustpilot in a positive way, trying to sort of like champion the things that are very positive about what we're doing, and then really engaging with customers that have had problems and trying to understand where that comes from, what the issues are, and then if there's anything that we need to do, we make adjustments accordingly. But also as well, the other side of that is anything that we feel, well, that's a little bit unfair, then we also want to feel that it's okay for us to respectfully put that information out there for people to draw their own conclusions, and that's all of that is. And I think that's fair enough. So this gentleman here put a 1-star review on a couple of days ago. Scam, that's a very, very harsh word, but he's put a 1-star review on there, and I want to go through that in a bit of detail, and I want to explain where we would see it. And I think if you're an experienced trader, you'll understand the context. Now, this guy purchased a 40k instant funding account, so he's funded. One of the things that he found confusing was, and he wasn't happy with after the account had lost its drawdown level, and he elected to go onto Trustpilot and put the review, is that he said that I paid for a 40k account and I only got 10k. Yeah, and he was annoyed about that, and he was confused about that. So one of the things that I think that potentially has been missed in this situation is that the information about that is on the actual website. If you actually go to the you go to the link down here that you can see, FTUK.com's pricing, look at the scaling plan, you will actually see that for the 40K program, the actual starting point is 10K. So it is there. It's not hidden anyway. It's well, I mean, not hidden. It's full page on the actual website. You can see that. So maybe that had been missed. I'm not quite sure. But he obviously wasn't happy about that. Now, what that means is it means that with the 8% drawdown, that means that with a 10K starting balance, you would have to make 1K, which is your 11 grand, which brings it up to 11 grand, and your drawdown level would be $800, 8%, giving you a drawdown balance of 9,200. That's the context around that. Now, he did lose that on one particular trade, which I will go into the details of the trade so that everybody can see exactly what has happened there. But he said that he wasn't told anything like that, but it's difficult to know how to play that because it is there on the website to see. I think what maybe we can do going forward is we can always try to bring a bit more transparency around how that is actually working. And there's a very good reason why you're purchasing a 40K program, or it can be any of the programs, but those instant funded accounts, they always start from a quarter of the balance point. And I want to explain in this live stream why that is, because there's a very, very good reason for that. Number one, it's an instant funding account, which means that it's live, it's yours from the very, very beginning. There's no evaluation in any of that. So on a 40K account, that means the drawdown level, the 8%, would be $3,200. Now, what's really important to understand with the instant funding is that as a company, anybody can walk through the door and purchase any of our instant funding accounts, and they've got the account there in front of them. They can trade, and then the profit share is obviously real and stuff. So if we have to cater for anyone coming through the door, we don't actually know how good are they? Are they new? Are they experienced? Have they traded with props before? I don't know. That's not something that we can cater for. So what that does is it increases the risk quite significantly. So one way of doing that is to say, okay, well, as a company, we'll front the risk on the instant funding, but we also then ask the trader's fee to then front some of that risk as well. And to be honest with you, I think that's fair enough. We do a little bit, and also the traders as well. Now, on 40K, if you want the 40K account, which you can have, that risk is $3,200, which means that we would essentially have to ask the trader up front for $3,000 as a price point, which is incredibly expensive. And that then limits the amount of people that are able to get access to that sort of level of funded account. And I think that's not, I think we can do a little bit better than that and lower the barrier to entry. So one way of doing that is by taking that 40K and splitting it into 4 pieces and then reducing the actual cost point. So the cost point to get involved with the 40K account is actually only $550, which makes it far more manageable for so many more people, which means that as a company, we only have to front $250, and then the client is then fronting the $550, which makes the whole thing much more easier. And it's only one target before you're then at the 40K. So think of it like a ramp. It's an on-ramp into it. Now, some people would say, oh, this is just a one-step evaluation. Well, no, it's not, because there's no evaluation. There's no assessment at all. It's instant funding. It's a lower ramp on to the 40K, which makes it easier for the company and makes it easier and cheaper for the client to get involved. That's the reason why that is there. This as a concept is something that we like doing, and we're going to keep it in our instant funding model, certainly for the foreseeable, in these new accounts that we're going to roll out. What we will be doing is we'll be creating some video content and more stuff on the website, which sort of like goes into the detail for anybody that is interested in understanding that. But that's the reasoning why it's there. So it is on the website, it's there, but the issue that I think that we've got with that kind of thing is that this guy then put on your website, you clearly mentioned it's a 40K account. Yes, it is. And the drawdown limit is 8%. Yes, it is, which is 3,200. Yes, it is. But it's fake, and they're doing a scam here. What they show on the website is not real. Well, we've got it on the website. It starts at 10K. I think that's pretty clear. So the issue from there is, once you receive the account, you'll see that the details in it says 10K. What I would say from there is, if you're not happy, you shouldn't start trading it. I think that's fair too. You know, you're not asked to actually then start trading it. If you're not happy, don't trade the account and get in touch with customer services, and we can figure it out from there. Alternatively, maybe even we can create the option where if you did want the 40k up front, yeah, okay, that's fine, but it's going to cost more than $550. Maybe that can become an option, and that's something that we can maybe discuss going forward. But I think, you know, I would question, okay, if you're not happy with that, the way that is working, why trade it? Why then go forward and actually start trading the account? I do think that is reasonable to ask that question, which I think is important. Okay. So let's look at the actual trade. Now, unfortunately, this gentleman, he was scalping the market. He was doing a lot of gold scalping. Gold is incredibly popular here at FTUK. A lot of people trade gold. And it was one particular gold trade that lost the drawdown on the account. And I want to put that, this is that trade on here. So it's just there for transparency. And I be honest with you, I've been trading for 16 years. So when you look at this, you can understand the details of exactly what's happened. This is a long gold trade on the non-farm payroll Friday, just gone. At long at 2366.83 on spot gold, and the stop loss was just here, just under this swing low here. This is a 5-minute time frame, and that stop loss came in at 2361.83. So that's just under that current swing low. Now this trade was put on the market about 4 or 5 minutes before non-farm payrolls. Now we covered non-farm payrolls live. Now, if you go back and you look at the non-farm payroll stream, and I did this morning in preparation for this, you'll see that I do very clearly say on the non-farm payrolls, do not gamble into non-farm payrolls. So carrying a lot of leverage 5 minutes into the non-farm payrolls with a really super tight stop loss on gold without really knowing what's going to happen, I think any trader with even a few years experience would see that's a very, very bold way of trying to scalp the market. Now, potentially maybe this trader was not aware of the non-farm payrolls. That is an option, and I'll be honest with you, full respect to the guy, I don't know how long he's been trading, and I don't know what the situation in terms of what he was trying to do with trading around the news like that, but from an experience point of view, I would say that's not a good approach. That to me, that feels like you're really pushing your luck to try and be able to get away with that. So because I remember on the live stream when the number came out, whatever it was, 206,000 or something like that. Bang, that was it. Gold was gone. It moved down to that 350 within a second. I mean, you can go back and look on the stream, you'll see it. I mean, surviving that is incredibly difficult to do for even very skilled traders. That's why I've said in the live streams before with non-farm payroll, don't trade the event, wait for the volatility to calm down and pick your places after that. It's a very, very risky way of working if you're going to do that. Now, this guy, unfortunately, he just happened to be on the wrong side of the market. What was his reason for being long gold at that particular point? I'm afraid I don't know that. But I think going into a non-farm payroll 5 minutes before with a very tight stop loss and a lot of leverage, I'm not surprised. I'm not surprised what happened. So he basically instantly lost the account there and then. Literally, like that's it. It's just gone. Account breached because of the way that the systems work. Now, what you'll see is the market down here, it only hit this area down here at the bottom of this candle. It's not. I hope you can see that on the screen. This down here was his actual fill price on the stop order, which is $23.26.50. So he lost $1,700 on that. And bear in mind that the drawdown on the account is $800 on that initial level one. So it's a big loss, and even you can't get them out of the market because that is the fill price that's coming in from the liquidity provider on CTrader. There's a huge gap there, and that is what you would call market slippage. Now, is that aggressive? Is it unfair? Well, I mean, I've been doing it a long time. That's how orders work. So the reason why I wanted to talk about different order types today, because it could be maybe this gentleman needs some more understanding of the different order types and how that functionality of the market works. There is not enough education out there about how the mechanics of these things actually work. When I look at that, I see that as being bad slippage, and you would expect that kind of a fill if you had a lot of leverage in a market that's very thin on the most important news event. But for someone who's still learning, that can feel, I get where the frustration comes from. That can feel incredibly incredibly unfair, and it's a brutal lesson to actually learn. There's nothing, I don't see anything that has been particularly unusual. It is a bad slip. There's no question about that. Is it authentic? I would say so. Is it what you would expect at that time? Yeah, it can happen. That was quite a sharp spike on gold given the numbers, but this is what it's like trading news. Is another one of the reasons why maybe what we should do is decentivize news a little bit. I don't know, but that is the actual trade. Now I'm going to explain the slippage element of that, and this is going to get a little bit detailed, but I think it's important because what I want to do, I've been here a few months now, is I want to put a lot of information out there so that we help traders understand exactly what they are dealing with, so that these situations like this don't happen. It's really important to do. So we're going to talk about order types today. We're not going to look at every single order type. There's quite a few of them. We're just going to talk about the big guns, the basic ones, the ones that every retail trader is going to use, and they are limit orders, market orders, and also stop loss orders as well. I want to explain the differences because once you understand this, you'll understand why slippage happens, and it can be very aggressive in some of the big markets when the liquidity dries up on a news event, and you'll understand why by the end of it. So let's talk a little bit about limit orders first. Now, a limit order is an order where you want to trade the market, but the market is currently not at the price that you want to actually trade at. So let me just see if I can bring up my trading view chart here. How do I do that? I've got this set up on a button here. I think it's that one. There we go, there. So you can see this euro dollar chart here. So the market is currently sitting, this is a 1 hour time frame. So say for example, on the spot rate now at the moment we've got 108.99, just under 109. Say for example, I thought, well, I want to be long at this support down here, 108.69. What I can do is I can park an order on the market, on the order book, on the chart that tells my broker that I want to get involved in the market if it comes back down. So I'm making the market come to me. I can do that on the long side underneath, and I can do that on the short side above. But the point is with the limit order is I'm going to get that particular price for the quantity that I want at that particular time when the market comes down to touch that area. And I will not be filled in my position until that happens. And if I can't get that price, if it really kicks off, then I will not get anything at all. That's what a limit order essentially does. And if you, excuse me, I apologize. Let's just go back to the actual thing. This is why I put I put these details on here. So that is what we would describe as a passive order. It's passive. It's just waiting. It's like a mouse trap. It's just waiting for the market to come round, interact with your level, interact with your order, and then also you'll get your filled price. You are telling the broker that you want to transact at that price only. There's a couple of restrictions though. And that is, you can only put a buy limit below the market price, and you can only put a sell limit above the market price. So you can't do this on both sides of the market. That is something that confuses people. Now, I've got some video content that I would like to build over the next couple of months, but we're so busy with things that explains order types in a lot of detail. I'm not going to go into the details as to why that is there, but you will understand the specifics when I make these videos. But the point is, the thing to remember is if you're going to use limit orders, you've got to be only placing buy limits underneath, and you've got to be placing sell limits above. So if you look at this here, you should see I've got a ladder here. This is my futures account that I have with the CME. Now we don't do futures, but the futures market will become important in a second when we talk about market slippage, because that's where I want to get to in understanding all of this. But you can see this ladder here. So on the right hand side you've got people that are looking to sell the market, and on the left hand side you've got people that are looking to buy the market. Now if I want to use a limit order here, what I've got to do is I've got to place that under there. So you can see the market is currently not trading 2413.6 on the gold futures, but I've got my limit order on there, LTM, to get filled. So if the market comes down there and interacts at that level, I will get my price. I will get my price for the quantity of contracts that I'm asking for. Again, if I want to go on the other side, you can see there, I can put a limit to short the market, but the market now has to rally up and actually touch that area there. And if it doesn't do that, then I'm not going to get filled. That is how, in fact, let's just wait, see if we're going to get this filled. Oh no, we're not going to do it. I'll just move that up. See if we can get, there you go. So I now got the position in the market that you can see there. That is how limit orders work. I cannot put a buy order, a limit buy above the current market price over here. You can see the numbers down here, all the orders, and you can see that I can't put those. There's no orders above there. That's not permissible, and it's the same on the other side as well. So that is the detail of understanding how a limit order actually works. Okay, so let's talk about the next one. This is the way that most retail traders that have never traded before get involved in trading markets, and that is just using market orders. And market orders are basically just hit the button to buy and it's there. You're done. And that is basically an order to your broker to buy at the current market. If you're going long, the best offer that you can find, the broker can find to fill you so that you can buy at market right now. It's right at the coalface. So on these charts here, you'll see that if I take that limit off there, so I'm in there. So if I just close my position now, in fact, actually, if I just sell here, if I click down here, it'll transact me at market. Watch. There you go. So I'm out of the market now. And that was using a market order. So it's basically just buy and sell right now. And you can do that going in, and you can also do that coming out as well. So it's real at the coalface trading. You get in and out there and then. You care less about the actual price though. What is important with a market order, and what's important to understand, it's all about time. It could be that the market's going against you and you're hemorrhaging money. The most important thing is you want out, and you want out right now, or you want in and you want in right now. The time is the most important thing. It's less about the price, and that means that you don't know how much liquidity is around. So for the freedom of being able to transact in the here and now, you have to sacrifice something with the broker, because if there's no liquidity there, the brokers might potentially struggle to get you the price that you want. So with a market order, you might not get the price you want. So during a non-farm payrolls event, when this guy has been spiked out and his stop loss has been triggered, that's been turned into a market order, and then it's been triggered. But which price are you going to get? It's whichever one they can do, because everything just dries up in those few seconds as non-farm payroll hits the wires, you see. So that's where how understanding liquidity feeds into all of this. So for the freedom of being able to transact right here and now, you have to sacrifice something, and that is the price. And what your broker will do once he's received the order to transact, he will try and find you the best price that he can at that particular time, whatever it is, and that can widen massively, and that's what's happened in this non-farm payrolls. The last one is a stop order. Now, a stop order is an order, but the stop itself is actually just a trigger. It's just a switch. And what it is, it allows you, in a limit sense, to park your position on the order ladder. But what it allows you to do is, it says if the market comes down to transact at that point, then what it will do is, once the market hits it, the stop will twist it and turn it into a market order. And from that point, the broker will then transact you at market. So it's like a market order that is placed somewhere other than the current price. That's basically all stop loss is. So when you and the reason why they're popular is because and the term stop loss came about is because people used these stop orders to help get them out of losing positions. Because when the market's going against you, you've got a leverage on, I've got to get out, yeah? So they use these stop orders for doing that. And of course, they need to get out right here and now. So the market order is the way of guaranteeing that you're going to actually get out, which is obviously what you need to do. And that's where the term stop loss actually comes from. It's the amalgamation of all that functionality. I know it sort of sounds kind of dry, but it's so important for people to understand this context, because it solves a lot of the confusion, and people then don't make mistakes and things, because they understand how the functioning things in the market work. And all as well, this is not internet stuff. This is nothing new. Order types like this have been around since markets, yeah? So this is the way the market actually functions. And if you're taking your prop trading career seriously, then yeah, you really do need to know. You absolutely need to know. So let's just have a quick look at that, how that works in the market. Let me just bring back up my ladder. So let's just go. I'm going to see if I can get this working on the stream as well. So if I just go in with a limit order there, see if we can get this working. And there you go. So you can see it there. So I've got a limit order here now at 24.14.2, and then if we get filled, then what will happen? There you go. So we got the fill there, and then what will happen from there? If the market was to drop down, then that stop order would then get turned into a market order. Now, if the volatility really picks up, I might not get 24.13.3 where I've placed my stop. But when the market hits 24.13.3, it will trigger my market order. That's the difference. So this hopefully solves the confusion of a lot of traders that will look at it and say, I put my stop there, but I got this. That's not fair. And it's not understanding the difference between limits, market orders, and stops. It's really, really simple. Okay, final thing that I want to talk about is this. Actually, there's two more things that I want to talk about. Slippage, because that's clearly how this account was breached in an instant, which is obviously where the frustration and the anger comes from. And slippage is one of these components of understanding market liquidity and how the function of orders interacts between you and your platform and the broker. So the reason why I've got a freeze frame of this here, if you look at this, the way that this is actually structured out at the moment, you can see this freeze frame here. You've got 24.05.90 on the gold market. On the buy side of the market, there's 7 contracts. At this particular point, we don't know who's trading. Maybe it's 7 individual traders. Maybe it's one computer. Maybe it's 2 or 3 different traders with a couple of contracts each. Who knows? It doesn't matter. But the point is, at this particular point in time, 7 orders to buy one contract, seven contracts are available to buy at that particular price from someone who is selling. Yeah. On the sell side of the market, you've got 9 contracts here on the offer, and then it obviously then goes up. This is called market depth in trading terms. Now, from here, say I'm really, really long the market, yeah, and this is the non-farm payroll is just about to kick off, yeah, and it kicks off, and all of a sudden there's a flurry of stop losses, and the market starts to go down. The market only moves on the transactions that go that go in those that get transacted in that current bid and offer price here, sort of between this yellow line. So, say for example, I'm really long. I'm long 1,000 contracts in gold going into that non-farm payroll, yeah, and what happens from here is I've got my stop loss at, let's just say this number here, 24.05.50. So what I've got that you can't see, but the brokers can see, but you can't see, and I can't see either as a customer, I can't see that that someone has put 1,000 contracts as a stop loss market order at 24.05.50. I can't see it, yeah, but it's there. So all of a sudden, the market then trades down and it hits that number. Right, okay, well, all of a sudden, you've got me, I demand to get out of the market right now, and that's the order that I've given to my broker, and I've got 1,000 contracts to do. Okay, let's look at how many contracts are available on the bid side of the market. Well, there's 7 of that price, there's 12, 15, 34, 29. In total, on that bid, there's around about 200 contracts. It says at the bottom, the aggregated total, 197 contracts in total. Yeah, but I've just put an order on to sell 1,000. Yeah, so what's the broker got to do? So what happens is the matching engine, it starts filling it just starts plugging the gap. It's trying to get rid of the 1,000 orders hitting the market in one go, and that's where you get the big spikes from in volatility, which is something that you'll see in all markets around news events and the end of day and that type of thing. So the point is that when those 1,000 contracts are going to go in, they're not necessarily all going to transact at 24.05.50, because at the moment you can see there's only 29 contracts there. So the matching engine steps down to the next available liquidity, and then again and again and again, and it keeps going and going and going until that order to fill 1,000 has actually been satisfied. Yeah. That's it. So although I wanted to get out at 24.05.50, my overall average price for getting rid of those 1,000 contracts could be significantly worse. That is called slippage. And we've gone into a lot of detail about this, but it's so important to try and understand the concept of how this actually works, because it's why you end up in a situation where something like this happens, where you've got your stop loss, but you get a completely different price, and in this instance that breached the account. Now there's one more thing to add into this, which I think we should do for transparency and being open how this actually works, is you see that the actual price that the fill was at down here, the market on the bid side, because these are all bid prices, didn't actually even trade down there. We didn't even get there. What's going on there? Well, that's a component of retail trading, over-the-counter trading CFDs. Now, CFD stands for contract for difference, and the reason why this is so important is because there's a big difference in dealing in CFD markets and retail forex markets over the counter versus trading futures and options on an exchange like the CME or shares on the NYSE or the London Stock Exchange, whatever it is. Yeah, there's a big difference. When you get an exchange, you get containment, which means that the fill price can only ever be where the printed price is. As soon as you move into the CFD world, it's vast, it's huge. I mean, you've all seen those videos, the $4, $5, $6 trillion a day forex markets. Yeah, but that's not centralized. It's everywhere. It's all over the place. There's all sorts of different liquidity providers, ECNs, different arrangements, dark pools, big institutions. It's all connected in all these different ways and different people along the chains. You're interacting in that with a contract for difference through a broker, which means that you're not on an exchange. And the reason why you can get such a bad fill like that is because you aren't on an exchange, yeah, essentially, which means that you can't, you have no idea exactly where you, whichever feed you're actually having your orders transacted on, you've got no idea how that's actually connected together, because the brokerages, all they're doing more often than not, they're looking for integrity in the overall market price data feed. So that quite often they'll take futures prices and they'll take those and they'll wrap them into their own aggregated price feed, but you're not actually transacting on that. Yeah, do you see what I mean? It's a little bit different way of doing it. You're part of the over-the-counter market, which is why you get such a big discrepancy in the slippage from there. And I think I've said it before in talking about ECNs. People use ECNs all the time, and that's great. That's great. You get fast execution and stuff until something goes wrong and everything dries up. And then you are at the mercy of the system. So understanding how all of this works can helps you to understand, can help explain why this type of situation occurs. So if that was I don't actually know, because I just printed this from TradingView. If that is actually from whichever broker, this is an aggregated futures exchange price from the COMEX or whatever it is. If that's what that price feed is, then the fill would not have been quite as bad, because it would have been contained within the exchange prices. That's basically what it is. So yeah, so that is the overall look at that. So I'm hoping that we've done. So I'm really, really sorry that this situation happened to this gentleman, and we mean him no disrespect. Do I think that we've been unfair to him? No, I'll be honest with you, I don't. I really don't. I don't know his personal situation, how experienced he is, but from looking at this situation, I think it's valid. And like I said in the non-farm payroll stream, don't carry these big positions into these news events. And we've gone through an awful lot of detail as to explaining why that is. Okay. We've gone on a long time. Time for a weekend offer. Our summer sale is proving popular. You get 30% off any of the accounts that we've got before the big change happens. You can unlock a level 8 as well as part of that, and all you need to do is use the promo code summer30 at the checkout, and you should be good to go with all of that. Gosh, we've done a lot today. Right, that's it. That's everything that I've got for now. So thank you very much for joining in. And yeah, please, and thank you very much for your support in the community. It is super, super appreciated. Have a fantastic weekend, and we will see you all next week.